Good evening, everyone. I was asked, I think, tonight to talk about the social finance plan that we put together at the Mount Community Centre. The reason I begged for more time is because this is a complicated history and a complicated past, but I'm going to try and get through it in the allotted time. But the theme of the session, I think, is social financing solutions for the common good. And as I started to think about that and what I would say tonight, I realized the Mount's been involved in a lot more raising of capital for the redevelopment of the Mount Community Centre than just the social finance plan. So I thought what I'd do is kind of just quickly highlight some of those ways that we did acquire or raise capital, and sometimes without even really realizing what we were doing and that it was raising capital for the project. I'd just like to start tonight by encouraging everyone to dream and think big. You know, these projects like the Mount Community Centre only occur if a couple of people with vision come together. Great idea. The number of times we heard from people, you can't do that. Why are you wasting your time on that? Yeah, there was a risk that it wouldn't go ahead, but it did go ahead. And it demonstrates what we as a community can do if we come up with a big, brilliant idea. Come up with a big, brilliant idea, and there are people in the community that will work on the plan to bring that big idea to fruition. So dream big, think big. I mean, I'm getting a little carried away off my time now, but the Peterborough Poverty Reduction Network dreamed big. Okay, could we ever get a property that could accommodate affordable housing and a food center? We never thought it would happen. Nothing ventured, nothing gained is what some of those board members said. Another one said it's a once-in-a-lifetime opportunity. You have to go for it. And even though we really didn't expect we would pull it off, we did. So it demonstrates what community is capable of. And we were talking earlier tonight that governments just don't have the ability to finance these kinds of community developments. We have to be creative at the community level, working with the levels of government, but as well the community resources we have available. So dream big, think big, great things can happen. So just at the time we purchased the Mount Community Centre, we had enough money to pay the deposit on the offer to purchase the property, $25,000. We had no other capital. How would we ever make it happen? And I got thinking about the way that deal was structured. So we submitted an offer to the vendor with a significant vendor take-back mortgage at a very preferred rate of interest, never thinking that vendor would accept it, but they did, because they really bought into the program that we were rolling out for this community. That was a significant amount of the purchase price that we didn't have to go and raise from some other source to complete the purchase. We also pleaded with our prior owner that they were going to have to replace some of the mechanical systems that were rather tired, well, not just tired, but worthless. And instead of replacing those facilities, they offered us the cash equivalent. So here we are, we're acquiring cash. The vendor take-back was more capital that allowed us to complete the purchase. And I would say we invested a lot of time in charitable receipting as a part of this transaction. A huge benefit to us. Again, this is the kind of creative thinking that we had going on at the time by our Finance Due Diligence Committee. We also approached a social lender. Not that we really needed that lender, because the vendor take-back mortgage would have given us enough capital to complete the purchase. But we thought this organization would be a good partner. And I tell you, there are social lenders out there. You just have to dig deep for them. There are social lenders that will loan money for social projects, whether it's affordable housing, any community-based project. They're out there, and they can make capital available for any community project. We had other techniques as well that we're either doing or exploring. We have a big parcel of land there, so it gives a chance to sever off, sell land, raise more capital to keep going forward with the project. So it kind of depends on what you've acquired and what you have available. But it's this kind of creative thinking that can figure out ways to raise capital to do the kind of work that you want to do. We're looking at long-term leasing. We're looking at prepaid leasing. So you can have a non-residential tenant occupying space for 10 or 20 years. They prepay their lease. It's an alternative to actually owning the property. If they prepay the lease, that's cash coming into us that we can otherwise use in our redevelopment. We've also been working with housing service partners, many of whom have access to cash, but they don't want to be builders or owners, but they can put money into the project in consideration for a guarantee that, say, on a housing portfolio, 4 units might be available for their clients. These are all little techniques that we've been using along the way to acquire the capital that we need for each phase of the development that's underway at the Mount. So we did acquire the Mount, as I say, with very little investment on our behalf. We bought a building. It had no revenue, no rent, and lots of work to be done. So what happens next? I mean, we didn't have enough time for a capital campaign. As part of our acquisition financing, we had enough of a reserve to carry us for a year, and that was kind of risk mitigation stuff we were looking at the time. But we decided as a nonprofit we couldn't develop the whole thing all at once, so we broke it off into chunks. The first chunk being what we call phase 1, where we would try and raise enough capital to build out 43 units and a VON adult daycare program. At this time, we have no financial history. It's a brand new nonprofit corporation. Actually, we didn't even have charitable status at the time. It was the Poverty Reduction Network that initially actually purchased the property. How could we ever go about raising a significant amount of capital to complete that phase 1? The city and the county, fortunately at that time, had just rolled out their 10-year housing and homelessness strategy. So the city was able to provide us with $1 million into that phase 1 build-out. Went to the county, and again, this is another opportunity for how we can raise capital for these things. We went to the county, asked them for a donation. They said no because it was an election year, didn't want to make it a big issue. But we asked them for a loan, and they loaned us $1.7 million out of their reserves at a preferred rate of interest. Those two contributions from the city and the county gave us about 50% of the capital that we needed to proceed with phase 1. So we weren't there yet. But then we started thinking about this idea that would become a social finance plan. In the meantime, I just want to highlight something else. The original design for that phase 1 called for electric heating. And you may think, how could you ever go ahead with electric heating? Well, it's because it's about $800,000 cheaper than putting in a gas-fired system. So we were going to go ahead with electric heat. That's what the plans called for. At the end of the day, and with all the research that we had done, we were really nervous about the cost of energy. So we said we have to put in a gas-fired system. What does that mean to this project when we don't have that $800,000? We were introduced to a financier who would typically finance furnaces and air conditioners on either an own or a lease option. And they were interested in expanding their market share. So we entered into a deal with them that they actually financed the installation of our gas-fired systems. So we raised $800,000 in basically a lease-to-own finance contract. So again, this project doesn't happen without that kind of investment. So we still need about 50% of that original capital budget. How were we going to get it? Well, we had this idea, would the community want to invest in the Mount Community Centre? We were getting donations here and there, but we hadn't rolled out any kind of a formal campaign. So the idea was, could we raise a pool of invested capital from a bunch of different investors who would all be treated the same, and they would invest their funds into a common pool of assets. There would be an expectation that their loan would be repaid, although I think many probably figured they wouldn't get their money back. And there would be an expectation of a rate of interest, but the key point is they would be contributing to the incenting a community project. So we thought this could work. I don't think anyone had ever tried it here or anywhere else that I was aware of. So we started hosting seminars, and we hosted about 10 to 12 seminars, inviting people to those seminars, and we had tremendous response. So we thought this is a way to raise capital for this project. So we started working on the model. And with my background, I had some knowledge on what a syndicated mortgage looks like or a trust mortgage. So we worked on a model that would result in one person as a trustee holding a registered mortgage against the Mount property on behalf of all of those investors, whoever they might be. And that was basically a syndicated mortgage or a trust mortgage, and would eventually be known as our social finance plan. This model worked very well for us because we had the land and building as security. So any community group that owns a building or land can use the same kind of model to raise capital either to enhance that building or to work on the next project. It could also work well on lands that have yet to be acquired. So if it's a community group that's looking to purchase a property or a building, that kind of a social finance plan can be utilized to provide the down payment that might allow that community group to complete the acquisition. We could also probably do a similar plan based on, as the Community Foundation has done, they have provided us with that social loan, again, without security. So you can have unsecured social loan programs or even security on different assets that could be provided. So without getting into too much detail, and I'm sure here to talk with any of you on the detail, I won't go through the how we put together this project, but it does involve legal work. Our trustee was a Peterborough lawyer who offered his time to work with us. Having a lawyer involved in these social finance plans is a good thing because that lawyer understands the legal technicalities of a trust agreement and commitments to the investors. But our plan was basically to offer no more than $2 million of loans secured by that common mortgage, minimum investments of $5,000 because we didn't want to be dealing with $100 loans, even though they'd be much appreciated. And then what interest rate would we pick? We came up with a rate of 3%, which for a lawyer that does some private lending, that's a really good rate for a borrower that has no history at all. So we rolled that out thinking, well, people might buy into that rate because they're supporting a community initiative. What we didn't realize was that the rates on investments at that time were about 1%. So people investing in the amount thought, this is great. I'm getting a good return on my investment. There's an expectation of repayment, and I'm contributing to getting this project started. So as people made loans into this trust, this syndicated mortgage, we issued them what was called a bond, amount bond. And basically it's just a promise to pay that we would issue to each of those investors, kind of like if you bought a Canada savings bond. I use that as an analogy. You invest in the government of Canada and you get a Canada savings bond in return. The same thing here. People would have amount bond that we would issue to them. Just a couple of asides on this plan. A syndicated mortgage is a security under the Ontario Securities Act. And if you are rolling out securities under that legislation, there's some pretty rigorous things you have to go through. But oddly enough, because the Mount Community Centre was a non-profit, we were exempt from that criteria. So we didn't have to design and have approved prospectuses for these investments. We did one anyway. We did a summary that we handed out to all of our investors so they had a full understanding of what they were investing in. We also came up with a neat idea where people with self-directed registered retirement savings plans could take the cash out of their plans and invest it in amount bond. And that took us a long time to put together. It was complicated, but we got CRA approval, and we approached an administrator, Concentra Trust, who is aligned with credit unions, and they agreed to do it for us. We eventually sold out all $2 million worth of our bonds, of which about 400,000 came in through self-directed RSPs. Self-directed RSPs can be part of raising capital, but it has to have a real property, land. It's got to have a land component to it to be a qualified investment. So we sold out the $2 million fairly quickly. We then had enough capital to finish phase one. And our dream was that if we could finish phase one, that would give us some talking points with a lender who might be interested in taking us on. And at that point, we approached Kawartha Credit Union through Darlene, and they provided us with takeout financing that took out all our acquisition debt, but it also paid back those social investors long before they ever expected to get paid back, and they were rather surprised by that. We had about 65 investors. So that demonstrates the commitment of the community to the project. And what we've discovered along the way is that there was another group, the Centre for Social Innovation in Toronto, was doing exactly the same thing we were doing. The interesting thing is that the paperwork we generated was identical. So it really started to kind of hammer home for me that there's a vision here, this social finance thing. We weren't calling it social finance at the time, but that's become kind of the basis for these conversations going forward. So we had unwittingly created our own social finance plan, raising capital to generate social and financial returns. And I would say I'm speaking tonight from a housing perspective, but we have health services at the Mount Community Center. This kind of social financing, and you can create it using many, many different models, can be used for social, health, recreational, environmental purposes. It's not limited to just housing. And as a community, I'd like to see us kind of grow into that vision of social finance to help support some of these community projects.